we covered candlestick basics and are continuing Investor Series 2, where we give a company suggestion to invest along with its analysis. Now, let's start the technical analysis playlist, the analysis which is loved by everyone. Let's start with the basics in this video. Let's learn what is technical analysis, what are technical analysis assumptions, what are technical analysis considerations, what are technical analysis benefits, why should a trader learn about technical analysis? Hi viewers, welcome to the world of Get Trading. There are two types of analysis in the stock market: fundamental analysis and technical analysis. Using fundamental analysis, we can understand which company to invest in. Using technical analysis, we will understand when to invest in that company. To be specific, we will know the entry point and the exit point. Okay, what is technical analysis? Analyzing the price action with time, which means understanding how a company price will move with time. For example, let's take this chart. This is called a line chart. The x-axis represents the time. You can see here the dates or time. The y-axis represents the price mentioned in rupees. Every day, stock price opens at a price which is called opening price and closes at a price called closing price. Suppose you join all the closing prices, draw a line, it is called daily line chart. Analyzing this chart is called technical analysis. Second, technical analysis is an art and science of forecasting future prices based on the past price movements. We call technical analysis an art as well as a science. We call it science because we develop a methodology, experiment it, and backtest the technical strategy. We also call it art because we will learn how to develop this methodology, how to use it, when to use it, and how to pioneer it. Using this methodology, we will analyze the past price action and predict future price action. Third, technical analysis means analyzing the current demand and supply of securities. Till now, we focused on only time and price. There is a third element which is followed in technical analysis, that is volume. Volume means number of transactions taken place in security at a given time. Transaction means the number of shares that have been sold. Please note this point. If you are buying shares, that means someone is selling those shares to you. Similarly, if you are selling the shares, that means someone is buying those shares from you, right? Exchange or broker doesn't hold any of the share. They are just an intermediator. Okay, using technical analysis, you might find a buying opportunity in one script. You may think that everyone will analyze the same way and do only the buy transaction, not the sell transactions. You may also feel no one may sell, so no sellers at all. But this is not correct. Stock market participants' opinion on a share will not be the same always. At one price, you might think about buying the share. At the same time, another market participant might think about selling the share. Opinions on a share price will be different among the stock market participants. Then, only a transaction will take place between both the parties. The action of the price after a transaction will determine who is in profit and who is in loss. Now, again, suppose the price is rising and you found sellers in the script. It doesn't mean the seller is losing. Either the seller is booking profit or in need of money, or it could be any reason. Okay, getting back to volume. Volume means number of shares traded in that time frame. Number of shares sold is equal to number of shares bought. Along with the price action, you should also observe the volumes. If a share price is either rising or falling, one should check with how much volume it is rising or falling. If a share price is falling but volume is low, it means the fall in share price is temporary. Similarly, if the share price is rising and volumes are low, the price rise is also temporary. Now, let us see the assumptions of technical analysis. The assumptions which are taken into consideration by a technical analyst. Number 1, market discounts everything, meaning the market will react to the news which will impact the economy. Example, suppose if banks announce it will reduce the interest rates offered to businesses, this will have a good impact on business profitability. So, the share price of the companies will surge. Eventually, markets will do well. Suppose if the dollar depreciates, Indian export companies' revenues get impacted and the share prices of those companies will drop. So, we should believe that price discounts every news which will impact the economy. Second, price moves in trends. Prices always move in a trend. But note, it will not continue the same trend always. There are 3 types of trends. This is uptrend, this is downtrend, and this is a sideways trend. We will explain these trends in the upcoming videos. For now, we should believe the price moves either of the 3 trends. Third, history tends to repeat itself. Means, based on past price action, we can try to predict the future. If the price reaches a certain point and reacted differently, we believe that price might react the same in the future if the price comes to the same point again. Look at this chart. Price is moving between 2 points. This is called support. Once the price reaches this point, the chances of dropping below this price are less. It means sellers are not willing to sell below this price and buyers are ready to buy at this price. So, the price started moving up. Similarly, this is called resistance. This means the chances of price rising above this price are less. It means buyers are willing to buy above this price and the seller might start booking profits. So the price trends down. Once the price reaches to support, now we will believe it might rise again. This is just an assumption made considering the past price action. Believing such concepts are called history tends to repeat itself. Will technical analysis work on all the scripts? On which products or securities we should use technical analysis, we shall discuss it now. Securities with good volumes. It works on securities with more buyers and more sellers. It means liquidity should be high. We will explain this later. Stable volatility, meaning if price is moving randomly and hugely without any consistent pattern, it may not work. Sometimes the price of the share moves rapidly and sometimes no movement at all. This means someone is operating the share price. Technical analysis works only on the scripts with stable volatility. Securities that move in a trend rather than moving randomly. Technical analysis works only if the share price moves in the trends which are discussed earlier. Before going to it, for technical analysis, we need a good charting and trading software. We recommend you to open your account with Fyers, one of the best charting and trading platform. Trading view charts, customizable charts layout, different indicators, drawing tools and whatnot. To open your free trading and demat account with Fyers, please click on the link in the description box below and submit your details in the page opened. Okay, let us discuss the benefits of technical analysis. It helps us to forecast the trend. As discussed on trends previously, we can forecast the trend using technical analysis and take an early advantage in price movement. Secondly, will give us entry point and exit point. We will know when to buy the share and when to sell the share. So, chances of making profits are higher learning technical analysis. Third, take calculated risk, not random risk. Nothing but stop loss. Till now, we didn't discuss on stop loss, right? Stop loss means if the price moves against your analysis or your prediction, then you will lose money. But to avoid excessive losses on the trade, you can place a stop loss. We might be good at our analysis, but there are always uncertainties in stock markets to lose money. One should always place a stop loss to your trade to not lose all your capital in a few trades. This stop loss should be decent. That is not too narrow every time it hits, not too wide that you lose more money. It should be decent enough. You will surely master it in our videos. Fourth, it helps us to find demand and supply. As explained earlier, using volume indicators and other indicators, you can predict and analyze the demand and supply in the script. Likewise, there are many more benefits. As said, you will surely get to know the benefits and you will surely get benefited if you follow all our videos. So, do watch our next videos too. Do subscribe to our channel and press the bell icon. Do like, share and comment. Do consider opening your free Fyers account through us. Have a happy, safe and profitable trading.